Alrighty guys, welcome to another Sunday session stream. Maybe something you do once a fortnight, once a week, once a month, depending how we go. So what I thought I'd do is on a regular basis, come on here with you guys, have a chat, give the opportunity, whether you're from my free Discord, premium Discord, just follow me on YouTube, Telegram, vice versa. Give the opportunity to ask questions, but also use it as an opportunity to reflect on the week, maybe talk through some of the setups that we talked through with the community, the premium community, but also stuff I took myself, psychology, risk management, and anything in between. So I think, overall this week, it's been interesting, and a lot of people have asked me in general, how I've found the week or how I've found the month. And in all honesty, most of my trading has come in the Asian session this month. As you're coming into the stream, guys, any questions, ask me in the chat. Welcome to the stream. Welcome. If you're from my Discord, let me know. Let me know where you're from. And we're going to be reviewing some stuff today, reviewing some trades, talking through every session, I think. So we can talk through Asian session, London session, New York session, AM and PM. So I think there's interesting information pieces for both. And I'll probably do a bit of market analysis in terms of what I think is going to happen in the following week. Obviously, we're near all-time highs, right? So we'll keep that in mind. But we're going to discuss a few things today. I think we're going to go over some trade recaps. We'll go through that. We'll do a little weekly review. We'll do that. Question and answer. Any questions I'll answer as I kind of talk through. Talk about some psychology, some risk management, how to trade at all-time highs. And obviously we can relate to what ICT's talked about recently as well. But it's an opportunity, right? So I don't mind coming on here. Sunday, Saturday. For me in Australia, it is Sunday. I know for some people, depending, where you're from, it could still be Saturday. But this will be something we do on a regular basis. Jakarvis, welcome. Alabama, that's right, yeah. Saturday, Germany, UK, South Africa, Ethiopia. So we got the whole world, right? Many countries, many continents, which is beautiful. So yeah, I think we'll get started, right? If you've got questions, post to me and I'll see the chat and we'll go from there. This will be uploaded later on anyway. In terms of how long we'll stay on for, maybe about an hour or so. Florida, welcome George from the Discord. Warren, welcome. And as we go through, I just want to kind of have a little structure for today's lesson. So I think what we're going to do is this, right? We're going to start off with just looking at a macro picture in terms of what's happened with the market this week and where we're currently sitting. Just in the 15-minute chart, just to show you guys how, market structure repeats and patterns repeat in the market. So currently this is what we're looking at, right? This is where price is sitting. We're at all-time highs. This technically here is the all-time high. This blue line right here. That's the all-time high. Can we reverse at some point? Maybe, right? But we're not trying to pick the tops. That's really important. We're not trying to pick the tops. Tom, welcome Tom. I recognize the name. So Jakarvis says, what are my favorite macro times for Asia? And let's do that, right? So this is for me with Asian session. I class typical Asian session as 7 p.m. to 12 a.m. New York time. So if you look at the bottom of my chart, if you can see it, down the bottom here where my cursor is, I don't know if you can see that drop up menu. Let me have a look on my side. Let's go back to live here. Yeah, you can see that, right? You can see where it's set to. It's set to UTC, and then you've obviously got New York. That's what I set it to. I could set it to Sydney time, but because most people are from America and trade, and also ICT and other people have their charts like that, it just makes it easier if we set it to that. So that's your Asian session, right? That's your Asian session. There's two ways I'll trade this, and in terms of macros, there's two factors to it. Two areas. Now, obviously in this span, there are so many macros. Like when you break it down, there's heaps. And this is where a lot of people struggle, and sometimes I do as well, because I'm thinking, okay, well, which ones do I want to focus on, or which ones are more important? You've literally got 6:50 p.m. to 7:10. You've got 7:50 to 8:10. And the list goes on, and you can imagine, right? And this is all PM New York time. You can't necessarily, or you don't want to be staring at the charts forever. You don't want to be doing that. It's just a waste of time. And then you've got this one. This is the midnight macro here, which I do like. So in Asian session, you've got 1, 2, 3, 4, 5, 6 macros. In London open session, you've got what, about 4? So a little bit less. And I guess as someone who's traded a lot of Asian session lately, I will do 2 things, right? We'll talk about macros, and over here we'll talk about the opening range. So there's 2 things. Opening range is, for me, from 6 p.m. to 6:30. Some people move it to 6 or 7, but that's what I class that as. Now, in terms of which are the best macros to trade, it doesn't matter what session. So this could apply to those trading New York session. We'll go through that in a second. The best macros to trade, or my favorite macros for Asian, are the ones that line up with market structure. So I'll repeat that because it's an important point. The best macros are the ones that line up with market structure. And we've heard ICT. He talks about time, he talks about price, I talk about it, people talk about it, everyone talks about it. But all that means is this. If we go back, right? If we go back and, we have a look at, say, Asian session over the last couple of weeks, last week or so, have a look right here. Have a look right here where my cursor is. This is from the 17th of September, which is a few days ago now. Look what I'm drawing out here. This is your bullish gap on the 15-minute chart. This macro, if you look at the bottom of my chart, you can see it says 17th of September 25, and it says 2100, so 9 o'clock. This is a macro from, if we go back to replay mode, right here. Right there. This is the macro from 8:50 to 9:10. All right, so look at this. This is what it looks like. Now, why would this macro interest me? Well, because we're delivering from market structure. We're delivering from a higher time frame FEG. If this was London session and this was 250 to 310, same thing. If this was New York session and this was 950 to 1010, same thing. Whenever we're sitting in a higher time frame fair value gap, I'm always interested, always. And so as the price kind of does its thing, you can see the macro does the heavy lifting. So we find some kind of support at this area. If we zoom out, we can tell we're already bullish. With this massive manipulation, I think it was FOMC, wasn't it? Yeah, that was FOMC. Massive manipulation, down, straight back up. We've got all this accumulation, manipulation, now distribution. Plus, we're already bullish, all-time high. So what I do to save time, because obviously if there's 6, 7 macros, you're like, I don't want to be looking and staring at the charts the whole time. I'll either in my head or on the chart, I'll mark out these PD rates. So say price is here, right? Say price is here. The opening range has some nice plays, right? Which I do like to take myself. But say you get to the chart right now, right? And here's the first macro from 650 to 710. It's coming up. There's nothing of interest for me. So just because it's a macro doesn't mean that I'm going to take the trade. I'm going to be actively looking for a trade, because if I look on the 1 minute chart, well, look, we've already moved up from here to here. Okay, if I look on the 15-minute chart, we're about to approach, or we just wicked into this little fair value gap there. But we're bullish. Look at that structure. Look, we can see that accumulation. We can see that manipulation down. We can see it's risky. It's very risky to go for a short. You can counter trend scalp from this 15-minute gap, but can you see that structure? That's the higher time frame structure. It's the accumulation, manipulation down, and now distribution up. So I assume that the best trades are going to be to the upside, and the riskier trades are going to be down to the downside. And that gives you narrative, that also gives you bias. So as that first macro comes in, if we go back now to a 1 minute chart, and say you mark it out, right? So you mark out the macro 2 lines like this. We go 650, and then we also go 710 like that, right? We've been pushing up pretty impulsively, okay? And look down here too, look. We've actually swept this low. We've actually swept it, look, boom. We swept it, and we reacted. And This is the opening range play here. By the way, we'll talk about that. Why is it a good trade? Or even from here, why is it a really nice trade? Well, because look at this. Boom, trend line liquidity. We go up. Macro comes into play. We're watching price. Okay. Am I looking for a short? No. Why would I look for a short right now? There's no impulse to the downside. There's nothing telling me it wants to move to the downside. We're inside of the macro. We just got to wait. Let price do its thing. It's playing out. It's doing its thing. Did the macro do much? No. Right? Do we have to trade every macro? No. Now, what price actually does here, have a look. If we zoom forward a little bit, speed it up a little bit, look what it does. Keeps slowly grinding. Could you take a trade in this macro? Yes. And remember I said like a counter trend scalp. So let's go here to 750 to 810. And while this counter trend scalp be valid, you might ask, it's counter trend, which means you take less. It's valid because we're still delivering from this 15-minute gap, but it's risky because obviously the overall time frame and the narrative is bullish because of that big power 3. So yeah, so you can look on the 15-minute chart, you can see that 15-minute gap, you can mark out this inversion gap right here. It's not a bad trade, right? You can see how price reacts from that. It's not a bad trade, but if you're taking something like that, you also have to appreciate that it's not going to be something that you really want to hold for too long. Does that make sense? You can see price trades back into it here. We drop back down. We also drop back down here. Is there anything wrong with taking a trade like this? Taking a 1-to-1, put your stop above the bodies. No, that's okay because you're appreciating that, look, this is counter trend. This is counter trend. There's a bigger power 3 at play. So I want to take my money and run. Or you take a partial and then what happens to price? We watch as we come to the next macro. What happens? We now have another 15-minute fair value gap we're delivering from on the buy side right here. And that's going with the overall order flow, which is why you have more impulsive legs or more impulsive moves. So I don't mind that as a counter trend scalp. Like we come up, look, we form all these relative equal lows like these ones here. You can take something from there, you can wait for a pullback and then look, wait for a secondary inversion. Those are often really nice to use when this candle closes like this. You can do this. Outside of the macro, have a very tight stop, expecting it to, deliver something, and just do that. Take 10 handles. That's okay, nothing wrong with that. But then the next macro comes, and each macro, important things can happen. So in this macro, we deliver from that 15-minute gap, and we push higher. We invert this space right here. We'll just mark it out. And this space, it's been bouncing. We break, boom. That becomes an entry. You can do something like that too, which is with the overall order flow. So, bit of a long-winded response, but in summary to that, to that question, what are my favorite macros? The ones that line up with higher time frame structure, 15-minute fair value gaps, and when we engage a 15-minute fair value gap, something important can happen. And if there's a draw on liquidity on the 1-minute chart, then you can take it towards that draw, using the 15-minute as a higher time frame chart. Longs, shorts, both valid on that day in Asian session. And like I mentioned before, the opening range is something that I do trade as well. I've collected data the last couple of months on that, which is the first half an hour of a trading session. You'd be surprised for those that do trade Asian session, right? There's a lot of opportunity in the first half an hour of the day. There's a lot. You go back to your charts, right? And we'll just do this quickly, then I'll go for some other sessions. Go back on your charts and have a look. Just have a look. Have a look at the first, say, half an hour, hour of the day. Look, from 6 o'clock, look. 6, this is a nice setup here. 6 to, say, 7. You can phrase some trades in there. Accumulation, manipulation, inverse, and then push higher. Does it make sense? Come back down. We sweep some sell side. Boom. And these are like scalpy trades. They're not, they're not trades where you're going, oh yeah, I'm going to catch the bottom or the top. No, it's not about that, especially if you trade the opening range or even New York session. If you trade New York session, you trade that first half an hour, you take what you can get because sometimes there'll be a Judas swing and you want to just take your money and just let it do its thing. At least partial yourself, take some money and then move forward. So I like that. That's a nice opening range play. And you might say it's only 2 minutes into the market, but look what you've got up here. You've got all this low resistance. You've got these two relative equal highs. We've accumulated pre-open. We've dropped down. We've swept this low, and then we bounce back up. That's an easy scalp. You don't have to take that much. You just take a 1-to-1 like that. And obviously the day plays out. The day plays out. Does its thing, right? And that's kind of how we get to that. So yeah, any macro that lines up with higher time frame structure, those are going to be the best. And so what I do is I mark out the 15-minute fair value gaps on my chart, or just visualize them. And what will happen as you get more experience is you visualize them, you visualize where price is in relation to those fair value gaps, and you'll have an anticipation of how long it probably will take to reach there. And that's why sometimes in the Discord, I'll say to the crew, I'll say, look, there's probably nothing for a couple more hours, because I can anticipate based on how much it's moving, it's probably not going to get to anywhere important for an hour or 2 hours, and that's when we can just chill. There's been many times on call where that first macro does nothing, and then the second macro will be the actual, the setup, the good setup that, that occurs there. So that's what I say. Steve from Sydney, Tom from the Discord. Let's talk about, does price always reverse during the PM session? Bulgaria, nice. Does price always reverse in the PM session? The short answer is no, but I'm going to start trading some more PM sessions soon. Because in Australia right now, I do wake up early in the morning at about 5 a.m. But when the times go back, daylight savings, it's going to be a bit more accessible. So currently how I do my trading is this. I trade Asian session to start. If I get wins in Asian session, I'll do a live stream with the Discord, and sometimes I trade London session myself. Other times I won't. When the PM session comes, right, then it'll be kind of like my overflow session, or I may use it as a higher risk session because yes, sometimes it does reverse. Not all the time, but sometimes it does. And sometimes PM session has some really good moves. For example, let's look at Friday. Let's go back in the week and let's do a couple of days of PM. And again, any questions, guys, post them in the chat. It's an opportunity. Could be about trading, could be about risk management. I'm easy. Again, let's just start with a 15-minute chart. Let's just start there because that's all you really need. You don't need higher time frames 99% of the time, and it makes your life a lot easier, trust me. If you're just focusing on 2 things, it's much easier than focusing on 5 things. So I just want you to look at the structure of the market, guys, and have a look at what price has done, right? Obviously, we're trending up. If I was to draw this out with this path, when we trend up, we can't just move up like this forever. We need to have some kind of pullback. Look what price does. It trends up, it pulls back. 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 It trends up, pulls back. It trends up, pulls back, trends up. It may do this, in my opinion, or here and then bounce higher. We'll talk about that later. Now, notice how a lot of the time when we pull back in the trending markets, we're not sweeping out these lows. Right, let me just highlight these lows. This low, this low, this low, this low, this low. Notice how we're not sweeping them. We're coming close, but we're not sweeping. This is where I use dealing ranges, and this is important for the PM session, to answer your question, but also for any other session, right? Because this will apply for the New York session. This will also apply when we talk about London session on Friday, where there was 2 losers, 2 winners of the Discord. Now look at the PM session, and this is the point where you want to be interested. Why is it the case? Well, we're bullish overall, like we said. Every time we pull back, we push higher. Every time we pull back, we push higher, but we don't sweep out the lows. We just come into a very deep discount. So look at price like right here. As price is trading down, right? As price is trading down. What I do, if I'm looking for higher prices, I look on this leg of price. This leg of price here, I look on this leg and I mark out this high and I mark out the low. That's a dealing range, just to see where we are in that range. I look for fair value gaps, that's number 1. And when you first start, my recommendation is just mark them out like this. Just mark them out, do this. And on the 15-minute chart, that's all you need. As I look up the leg, it looks like there's another one right here. Right, I'm including the volume imbalance too. But that's it. And there's another one here, up the top here, but we've blown through that, so it doesn't really matter. Now, I would rather not be involved in these moves down here. I don't like the grinding kind of moves. I don't like that. I prefer the low resistance runs, which are these moves to the upside. No, I like that to build, and then I like to take that push. Like that to build and then push. That's what I like to trade, right? So you're watching price, letting it do its thing, but what you need to do is you need to understand that when we're in discount and premium, different things can happen. So I'm just going to mark my fib from the bottom to the low like this. I'm going to mark it out. I'll make this a little bit thicker, and I'll just mark that out like this. That's all you need. Now watch what price does. It's not random. I'm not trying to say it's magic. I'm not trying to say it's very precise. It's just an area. It's an area. Price wicks into optimal trade entry. It wicks into discount, and then it bounces back up. And do this on your charts. Like I don't have to make it up. It's true. It happens all the time. And this is what I talked about on the call on Friday with the community. From swing low to swing high, look, it was always longs. It was always longs. Even after the 2 losses, it was always longs. Again, swing low, swing high, we pull back, we push higher. This is just something you see happen time and time again. Any swing, you want to be doing that on. Any impulsive leg to the upside when you're expecting a bullish move, you want to do that on, like that. You can do the same here, look. Swing low to swing high. You can do the same thing here. This is more for like New York AM session. Again, very good trade that day too, for those that trade it. Look, we pull back and we react. So these are the things you want to look at. These are the simplistic concepts. Discount, premium. When you're in discount, look for longs. When you're in premium, look for sells. If you're in discount and there's some really, like say you're down here and liquidity on the other side looks really nice, that's what you want to target. So you had that as a framework, you had that as a basis, and literally say you're watching price, and we go back now to the 1 minute chart, because I don't really have 15 minute on my chart too much. Once I've marked this range, like to be honest with you guys, if I was trading PM session, once the price is here, I'll go back to the 1 minute chart. That's what I'd do. And I'd just be waiting. I'd be waiting for price to do its thing, right? I wouldn't trust going for a long, because look at these relative equal lows. So what's price probably going to do? It's probably going to sweep them. So we sweep them, and watch what price does here, right? We come down. Cool, we wick into this area. That's optimal trade entry. Let's just clear this off so it's simple. We don't have to come here. It's better if it does into the fair value gap, but it doesn't have to. It can just react from optimal trade entry. So you're watching. That's the range. You go, oh, beautiful. We've pulled back. We've formed now all this, low resistance on the buy side. And watch what happens here. So if we zoom forward, and you might say, what about the macro? How do I trade during the macro? Well, you can take secondary continuations in the macro. So what you can do is this. The macro obviously spools, which is fine. You mark out the previous macro over here, which is from 1050 to 1110. And let's be realistic. If for whatever reason you see this and you go, oh, okay, we swept a low. Maybe you saw this. Maybe you go, oh, we swept this low, and price reacted. And then maybe you go, okay, I took a long from here. Maybe this was you, for example. And you go, okay, I took a long from here. I put my stop here. I put my stop there. Then you get stopped out. Not the end of the world. It's really not. Like, for example, on Friday session, there was 2 losers I caught. Similar kind of situation where we just wanted to grind down a little bit more, which is fine. Sometimes that happens, but this is where risk management comes in. So if you're looking at this and you're watching price and you lose a trade, you're not beating yourself up. You're not saying, oh, I must be wrong. Oh, I'm going to go for short now. I'm just going to go for shorts only. It's not about that. If that's your system and your system tells you to take that trade, you take the trade. If it wins, great. If it loses, also great. You wait, you be patient. You wait. You see price tap into optimal trade entry. You see price react. It reacts really nice. Look at this. Accumulation, manipulation, start to distribute. You go, wait a sec, I wanted longs. The longs are still in play. We still have highs here to target. I still want to look for a long. Yes, you may have lost a trade, for example, right? But then you come into the PM session or after lunch, and anything from here in between macros is fine. But if you don't like that and you want to trade macros, use inverses or inversions that occur just before. And what I like to do in these situations, you can see how we tap into it here, we reject, we tap into it here, we reject, we push up on the macro candle. That could be an entry. And this, if you enter there, you're not having a stop here, because why should price keep going down? No, you can either move your stop below this order block, these two down close candles, or if you want to be aggressive, here. And that is a good trade during the macro. And it's the same framework. This would be one where when you get more confidence, when you're more confident in your model and your system, you can hold to here. You can take a partial. You can take a partial that, makes up some of your loss and then hold a little bit more. And what I like to do in extensive runs like this, every time we form an order block, trail below the order block. Every time we form an order block, trail below the order block. Every time we form this order block, trail below. Eventually you're going to get stopped right on this candle here because it has to have some kind of pullback. But sometimes when you have low resistance, you have these massive low resistance liquidity runs and you can capitalize on a lot of the move with very little risk. So you can take losses and come back from, there's nothing wrong with that. But in terms of like your PM session, that is a typical, you trend down in one direction and then after lunch or at lunchtime, you have that reversal, which is a typical, I guess, market structure profile that ICT talks about. And we'll talk more about PM session, but hopefully that helps. Metro Trader says, could I turn on my Spanish? I should know how to speak Spanish, to be honest. My background, believe it or not, is South American. So my dad was actually born in Chile. But I will do that for you. I will do that for you. That'd be good. Multilingual. Imagine that. Speak a bit in English, a bit in Spanish. That'd be good. So I'm just going to look at the last question now. If you guys have questions, post them in, and then we'll keep talking about the different sessions. Maybe my thoughts about, market open on Monday, which for me is tomorrow, but for some people it's Sunday, right? That'd be so weird trading on Sunday if you trade Asian session. For now, we're looking at the market structure alone in the lower time frame. Can we add single candles, very next candle prediction for higher time frame analysis? And that way we can see lower time frame direction. Do this. Yeah, okay, cool. So at the moment, we're on the 1 minute chart. In terms of the 15-minute chart, for me, that's the higher time frame. Now, people find success. Here's an important point. People find success doing different things. Some people, they need to use or like to use even higher time frames than that. Like they like to use the daily or the 4 hour. But for me, and for a lot of people, I've found that I work best just operating on 2 time frames. 15-minute and 1 minute, with the occasional sprinkle of the 5, the occasional sprinkle of the 1 hour in some situations. A big part of how I trade, and for a lot of people would help with, say, narrative, and also for, building a bias or building a narrative, is to use dealing ranges. It's a big part. So for example, when price is sitting right here, why would I look for a short? When price is sitting here, why would I look for a short? When price is sitting here, why would I look for a long? It's already gone up. So a bit of trading is, using the previous range, seeing what price is doing, where price is delivering from, and what's the most likely spot for it to go, if that makes sense. What's the most likely spot for it to go? A lot of people, I think, overcomplicate it a little bit too much, and they think they need to know everything, but it's not the case. If you stick to a couple of things, a couple of systems, it makes it easier. You could literally just use dealing ranges and then pair that with macros. So whenever we dip into premium, you look for sells. Whenever we dip into discount, we look for longs. And then obviously with macros too, combining the two, you've got a good little framework. I don't necessarily like to predict. Some days for me, it's very clear. You know, when price was doing this, when price was stepping down like this, I didn't know, but I highly anticipated with high confidence that down here, we're going to react somewhere, which is why even after 2 losing ideas, I still stayed on the call if you're from the Discord, and I still was like, yeah, look, longs are still in play, because from what I've seen, sometimes in those conditions, you just want to build a little bit more liquidity, and then you're going to come up and you're going to sweep it out. So that's what I'd say. And look on the 15-minute chart, right? When you're looking at the 15-minute chart, look how these patterns repeat. If we just remove all this other stuff here, see when the market trends up like this. You have those pullbacks. Look how many times you pull back. Pull back. There are opportunities to continue taking longs. And these situations here, like down here, see how that's a really big pullback? See these really big ones, like this one here, this one here, this one here. These are the ones where you go, oh, if we pull back like this and then we close back up, you don't short that, you long that. Same here, look, we have this massive pullback and we close back up here. You don't short that, you look for longs only, because the higher time frame picture is telling you that price wants to move higher as well. So that's how I kind of like to phrase it. Again, post your questions, guys. That's a bit from the PM session. That's a bit from the Asian session. But let's talk about London. Let's talk about Friday. If you're from my Discord, you know about this. Let's talk about it. So we've got the swing high here. That's fine. We've got the swing low here, which is also fine. Now, on this day, it was always longs. It was always longs, right? Price was here somewhere, I think. It was always longs. So there's 2 losing ideas and there was 2 winning ideas. The last 2 ideas were the ones that projected, that had the opportunity to either mitigate losses or come back and, I guess, go to break even. The reason why down here it's longs is because look at that structure. Again, look back at what price is doing. All the way from up here, all the way from yesterday at 11 o'clock, price has been slowly stepping down. And in that process, what are we forming? Liquidity. The market likes liquidity. The market likes to move towards that. So when you're looking at the market, you want to target liquidity. When you see price come down, when I see price come down here, it's always longs. And I know based on, again, data collection, we'll talk more about that in this session too. I may have to reattempt ideas or reattempt trades. Now, we'll go through all of them, right? There was a risky some people in my Discord took. If you're from the Discord, you might have taken this. This was in the 150 to 210 macro. And I mentioned to my Discord, this was a risky entry. This was a safer entry. The risky entry would have worked out for a little scalp. It didn't project more. The safer entry would have been stopped out, which is fine. Then we wait again, right? And I liked this impulse coming through. I liked this impulse as price came up, right? I like that. And so here, there was 2 potential losing frameworks, 2 potential losing ideas. Now again, after 2 losses, and you got to ask yourself this question: are you able to take another trade? Mentally. I'm not talking about risk for now, I'm talking about mentally. If your answer is no, you need to work on data collection. It doesn't happen often. It does not happen often, but there will be times in the market where unfortunately, you will need to take some losses to take a win. It's great, I know. when you take 1 win and you're done, perfect, fantastic, feels great. But it's not like hard. Trading is not hard because you win. Trading is hard because you lose, and you have to try to mitigate that and manage your emotions as you lose or after you lose. And it's a similar thing. For me, even after calling 2 losing ideas, I don't just say, oh, I'm wrong. No, because I'm trusting the overall higher time frame picture that, look, we are going to swing up. So it's just a matter now of waiting for the confirmations that suit the model. Now, if those two losses went past your risk management, then you're done. You can't do much about it. You're going to miss out. And that's fine. What I like to preach to people, and that's why personally I've got multiple accounts at Top Step, more than what I'm trading on, plus with my funded futures, and a little side project. I'll make a video on that in a couple weeks' time. It's an interesting project. The reason why I have a few accounts and I don't copy trade is because of these rare situations like this, but also because I trade different sessions. So Asian session, London session, eventually PM session, and sometimes in between. And I like to spread my risk across those sessions. So that could be done, right? That could be done. Or it could be, okay, I've taken 2 losses. I'm happy to take one more trade. And typically for me, that's what the rule is. 3 strikes and you're out. If I get it wrong 3 times, I'm wrong. If I get it wrong 2 times, it does happen sometimes, but I know that yes, that last trade, if the structure is still there, could be the winning trade as long as the structure suits. And in this case, look what we're doing. Look how nice this starts to look. We are now in the next macro. We're now in the silver bullet, which is even better. The macro is here. The macro is from 250 to 310. Look at this. Look at that. The macro reverses. Okay, beautiful. We're starting to pair things together. And look what price starts to do. Perfect. And I believe the call out for the Discord was somewhere up here. I think it was this candle here. Yeah, right there. So, right here. I think it was this one. This is the first idea. Like this, I believe. And yes, you might have to sit through drawdown. Yes, it's painful. Yes. There's been times where even I myself have been ticked out of a trade, like literally ticked, one tick, and then it starts moving in my favor. But again, the question comes, do you have the confident data collection system? Are you confident in your structure of the system? Because if you are, you will hold that, because you'll have your stop below these candles where you found support and you'll hold that. Or if you don't like it and you close it, I mentioned to the Discord, there's an opportunity to actually re-enter here, which some people did, or here. And here is the next macro. Does that make sense? If you're using solely macros, this is also another macro trade, which is a continuation of the original framework that comes. So this is the other trade I mentioned here. I think it was somewhere from here, putting a stop below the bodies and then, taking what you need. So can you see how, look, in a session, you might have the right narrative. Sometimes the narrative plays out straight away correctly, but other times it doesn't. Other times, you're going to have to take losses in order to take the win. Just because you take losses doesn't mean you've done something wrong. It means you followed your system. And that's where I'll leave that. So you can see what price does, right? In this session, if you just came on at silver bullet, yes, you wouldn't take any losses. Like if I hopped on this call with a Discord at silver bullet, there'd be no losing trades. But because I chose to trade a bit earlier, which I normally do anyway, then yes, there's losses that incur. It's probability, right? And that forms the low of the day. It does. And this trade, especially to even this liquidity here, all this liquidity gives you an opportunity, if you did take losses, to mitigate that loss, to mitigate some of those losses, but if not, to have a smaller losing day. This, what you do here, right? Say you took a break even here and then you take a loss here, right? What you do after taking losses changes the trajectory of your day and of the week. Because for the person that's fearful and takes one loss and says, I'm done, they end up red. For the person that says, I've taken a loss, but now I wait, they end up in the green or they end up at break even. And that little difference, that little shift in mindset makes a big difference in the long run. Because you're doing that again over multiple weeks, over multiple months. If you keep being fearful because you take a losing trade, you're not giving yourself the opportunity for the market to then play out your edge. Does that make sense? But that was London session Friday. So the other 2 days are pretty decent, but sometimes this happens. And this is a long call. It's about 2.5 hour call because we started from here. And I think we finished probably about here, to be honest, on the call with the Discord. Anyway, that's that. Movie clip says, do I only use the 15 and the 1? Yeah, 90% of the time, 15 minute and the 1 minute chart. The 15 minute gives me the range. The 1 minute gives me the entry and also the liquidity to target. Does that make sense? sometimes I'll look at the 5 minute, because we might be, for example, I'll give you a good example. We might be, if we go to the 15-minute chart, we might be in a 15-minute range, for example. But then if we look at the 5-minute chart, look, it gives us fair value gaps. So in the Asian session, what I mentioned to the community was this 5-minute FVG, to look for price to bounce up from that. We did a little bit. There was some nice opportunities from there. And the same thing here, right? Notice how, look, that 5-minute fair value gap acts as support. And that was also another reason why this trade was mentioned, because we had a 5-minute FVG inside of the 15-minute range. But typically, yeah, it's just the 15 and the 5 and the 1 for the entries. Jakava says, am I still shooting for a 1-to-1, and how do I handle losing streaks? Great question. Before we get into that, Warren, yes, it will be on YouTube. It should be there after we end the stream. It should be uploaded straight away. So you'll be able to look at it, I reckon, straight away, which is good. So you can go back and watch it. That should be there. So in terms of, do I still shoot for a 1-to-1, and how do I handle losing streaks? Okay, cool. Let's talk through both. Let's do a bit of a overview first, and then we'll discuss some principles. So let's start with risk to reward, and let's start to talk about 1-to-1 and 1-to-2s and 1-to-3s and 1-to-4s, whatever you want to talk about here, right? So is 1-to-1 still profitable? Do I still do 1-to-1? Is it the best way to trade? Yes and no, right? And I'll explain what I mean. Currently, I'm trading with Top Step. I've got more than 2 XFAs. I'm just trading on 2, right? I'm almost max funded at the moment. My fund of futures, I've got that account I'm still trading on, the one that's from the giveaway. And then there's a side project, which I'll talk more about, but it's just kind of showing steady progression of something else. Each account, because of the rules, I trade differently. Now with Top Step, Jakavis, with Top Step, a lot of my trades are 1-to-1s. A lot, not all. So with Top Step, I'm a bit protective now of the accounts, because I've built them up, I've built the buffers, and they've been pretty green for the month. So with Top Step, I'm not really, with these accounts I'm trading, I'm not really willing to let a winning trade turn into a losing trade. You know, if I'm risking $200 a trade or $180 a trade, and it goes to $200, I'm taking it, because I want to just slowly stack those base hits. That's a Top Step, right? So 1-to-1s I'm still going for, and I still preach that for a lot of people. I still preach, if you're looking for a system, you should start off with, you know, getting comfortable with 1-to-1 risk to reward. Get comfortable with it. If you're curious, with the 2 Top Steps, the average risk to reward is 1-to-1.1 and 1-to-1.7. So that's what I'm going for with those accounts. So I'm sticking to that on those accounts. Sometimes I like to go for a little bit more now, especially if I'm starting a funded account or starting an eval, because the time that I've spent in that account is not that much. So for example, if I get a funded account and it's the very first day, if I go into a losing streak, it's not going to feel as bad as compared to if I'm 5, 6, 7 days in and then I start losing. So when I first get an account, I'm more likely to be a bit more risky. And that's why you'll see in the last video I posted on YouTube, the first 3 days were like 340, 500 and something, 400 and something. Like I'm going for a little bit more. I'm risking 1 to 2 minis and I'm holding for a little bit more, or I'm risking 2 minis and going for a base hit of 10 handles. I'm just taking the money while it's there. I'm trying to build up that, build up that buffer. So 1-to-1's really good as a starting point is what I'd say. And get comfortable with this, right? Get comfortable with that. Once you're comfortable with 1-to-1s, then I would highly suggest to look into something else. Look into getting an understanding of when you can hold a little bit longer. And that takes time and that takes data collection. So what I mean by that is this. You've done one-to-ones for about a month. You know what your win rate is. For me, it's about 70%, right? It's a little bit more at the moment with one-to-one. Why is it high? Because if you take less from the market, you're probably going to get rewarded more. There's less chance that it goes against you. You're not aiming for as much. Then you kind of have to collect data and you have to see what are the situations in which the market ran more than your one-to-one and how often did it run more? Because then you can think about what you want to keep and what you want to leave. And when you figure that out, then, right, what will happen is this. And I'll give you an example, Jacobus, too, for those watching. One example where it's okay to hold for more than a one-to-one, in my opinion, is when price has lots of low resistance liquidity and is delivering from optimal trade entry. A good example is what I mentioned down here in London session. Down here. That's a good example to look at for anyone. And if you see that pattern in any session, it's a good holding trade because it's a higher time frame play and a lower time frame low resistance. And then what you do is this. You get comfortable with one-to-ones, but you know when the market has a greater chance to run. So when the market doesn't have that chance, because you see the conditions, you go, look, this is not a condition set where I want to hold the trade. You take the money and you say, see you later. But when the conditions are primed for a running trade, then there's two things you can do, right? You can do one or two things. And I'll draw this out. Number one, right? You can partial at a one-to-one and hold for like a 1-to-2 or the next market structure element. That's one way to do it. Partial and then hold. Or what I've been doing on Top Step is I don't partial. I haven't partialed. With Top Step on those accounts, if it reaches a one-to-one and I want to hold for longer, I trail my stop into a level where I'm going to take at least a minimum hit for the day, which is 150. That way, if it reverses, I go, okay, who cares? I have a winning day, I'll move on to tomorrow. I'll try again tomorrow. But if it runs, then I get some bigger days, slightly bigger days. Does that make sense? So, you know, some days I'm not even risking $200. Some days I'm risking less because the stop can be, you know, very tight. And so I'll just trail my stop to become a profit day. You can also trail your stop at the one-to-one if price moves very aggressively. Like for example, say we look back on this session here. If we go back onto the 1 minute chart, this would be how you'd apply it. Say you entered there, right? Price goes one-to-one. Normally that's what you take. Normally you take one-to-one. Okay. You want to take at least 10 handles from the trade. What do? You trail your stop from where you enter to 10 handles. So say you enter here, you trail your stop to 10 handles. Say 10.25 because it accounts for commissions. Does that make sense? Now you might get stopped out and you go, oh, it's run more. It doesn't matter. Because on other days, it's going to run without coming back and you're going to capitalize on more. Does that make sense? So yeah, one-to-ones I think are still good. But I do think as time goes on, I like a mix. I've been pretty profitable with the one-to-one lately on Top Step, but you have to have really good control on the downside is what I'd say to Jacobus. You need to, if you are going just for one-to-ones, you got to have really good consistency and really good risk control, because if you're aiming for base hits, like when I'm on Top Step, I'm aiming for 180, 190, 220, 200, 150, 160. If you go on tilt, your account's cooked. It's cooked, right? Think about it. If you're risking, 150 a trade and you take 4 losses in a row, your account's in trouble, especially if your winning day average is like $200. And that's where sometimes going for a slightly higher risk to reward, if it wants to run and getting used to those conditions, allows the account balance to be a bit more balanced when you have those, those weird sessions or weird days. That's what I'd say. So you got to balance it out, but I think that's a good question, a really good question. In terms of losing streaks, and I know some people found this week hard and this month hard, and every month's going to be different. Well, there's 2 ways I see it, right? And a big thing I said to my Discord the other day, which I think is important, and these are the words, right? These are the words that I'd probably use. These are the words. This sentence, right? And then we'll discuss it. If you expect something to happen, when it does happen, or if it does happen, it won't be that much of a surprise. If you expect something to happen, and if it does, or when it does happen, it won't be that much of a surprise. Think about in life in general, in any aspect, right? When someone announces they're getting married, they're having a baby, obviously it's a surprise, right? But if you know about it, then when it gets released to other people, obviously it's not that much of a surprise. The same thing with trading, right? The same thing with anything. If you are, for example, going for a new job, you're going to be nervous maybe because you don't know the outcome. You don't know what to expect. But if you're already in your head, and write this down too, this is what I said to the Discord, right, the other day. Write down all the bad things that can happen and all the good things that can happen. So for example, write down, I can blow my account because it could happen. Write down, I could lose max loss for the day. Write down all these things, and then also write down the good. And read them out and become comfortable. That's the best way to put it. Become comfortable with the bad and the good outcomes. And then what happens in the brain, and what I've realized for myself is, I now know that, look, if I go into a losing streak, which I'm going to have a losing day on these types of accounts, it is going to happen, right? But I don't care, because if it happens, I know that it's going to happen, and I know that my strategy will get me out of that because I've got the data collected. And I don't want it to happen. I don't want anyone to go into a losing streak. I don't want anyone to lose 10 trades in a row. I don't want to lose 10 trades in a row. No one does. I don't want to lose 2 trades in a row. No one does. But I've come back from it before. And you will too. So if you're in a losing streak, you'll come back from it, provided you stick to your system. If your system's profitable, you have to. It might take time, but you have to come back from it. If your system's not profitable, or if you muck around and you're doing things that aren't your system, then you're messing up the probabilities. You're messing up how your system's going to play out. If you're just taking a random trade just to make money back, and even if you make money, you're not following your system, the probability is skewed even more so now, and then you can't expect things to work out better, if that makes sense. So that's what I do, like expect things. It's like for anyone here, right? You're going to blow accounts. I've blown many accounts in the past when I'm learning. I've told this to my Discord. I've blown many accounts. I have been close to payouts in the past, especially when I first started, and I've blown the account. I've been close to passing evals in the past, or back when they had like phase 1, phase 2 on those type of challenges. And I'd be that close, 1 day left, and see you later. Why? Because I'm trading for too much of the money, and I'm not just focused on trading. I'm trading for a end goal rather than just trading for the process. And when you first start, it's hard, because when something like that first happened to me, when I first blew my account, one of my first accounts, which was probably my Forex funds, or even a little bit before then, this was like a couple of years back, it was hard. Like, it felt like it was the end of the world. It literally did. It felt like everything was against me. The market was against me. It was the end of the world. But just trust me when I say this, when it happens to you a few times or multiple times, it doesn't become that much of an issue. And you find ways to prevent it from happening. But you become more accepting of mistakes. Not that I want to have mistakes. Not that I want to lose any account now, like I shouldn't, right? Unless there's some crazy market event that, changes the account structure, or maybe the drawdown is so minimal that I've only got a few trades left once I take payouts. That can happen, and it does happen, but you become more accepting of losing. And I think that's the biggest statement there. So if you're in a losing streak, just know that I've been there too. Everyone's been there too. And you can come out of it. But if you just keep thinking about what's happened recently to you, it's called a recency bias, then you're going to think that every single trade in the future is going to be a loser. And I've talked to a few people about this. If you've lost 2 trades in a row, or 3 trades or 4 trades, it doesn't mean the 5th trade is going to lose. It's every trade you take is individual. Every trade you take has a certain percentage of win rate, 50, 60, 70. So every trade there's an opportunity to take a winner, to take a loser. So if you take 2 trades in a row that are losers, the next one can be a winner, the next one can be a loser, the next one can be a break even. If I take 5 trades and they're winners or losers, the next one can be something different. That should give you kind of hope. That should. Even though each trade outcome is individual, that should give you hope in the fact that it's probability. So you got to kind of, a lot of people need to switch that mindset if that's you and you're thinking, oh, I've lost 4 trades in a row, I've lost 5 trades in a row. The next one can be different. And if the next one is not different, well, the next one can be different. So you got to accept it. Accept that things are going to go wrong. Accept that you're going to lose an account probably. Accept that when you get funded, a lot of people, most people I have coached, most people that have talked to me, privately and even speaking personally on what happened to me. Most people, the first account, you may get what's called beginner's luck for a lot of people. But a lot of people don't get that. A lot of people, they blow up. My first account with TopStep, it was gone in 2 days. I've told this story many times. When I was first trying to learn and I first got funded with TopStep, 2 days. 2 days, bye-bye. And this is back when, this is years ago now, at the very start where you could only lose $1,000 per day on the 50K account. And that happened 2 days in a row. And what was even worse, in Australia, Asian sessions in the morning, and this happened in Asian session when I wasn't even trading it properly. And why? Because I got greedy. I got the chance to make this money. I got the chance to feel something coming into the account, to feel dopamine, maybe to feel something. And that's not good. If you are very high in emotions, very low in emotions, that's not good for trading. You need to be somewhere in the middle. You need to be somewhere in the middle of your emotions when it comes to trading. That's crucial, right? Because as soon as you get that fund account, I guarantee, if you've never passed an account before, I guarantee you're thinking of the money. I know it. I know you are. I know I was. And you're thinking this, you're thinking, oh, beautiful. If I just take a bit of risk here, if I just do 2 contracts, if I just risk $1,000, and if I just win that first trade, if I just win this first trade and I get a 1 to 2, if I do that, if I could make 2,000. Oh, but you're thinking about the money. You're thinking about the money. You're not going to be trading properly. And when you lose that trade and you know you shouldn't have taken that trade, you go on tilt. And that's what happened for me. And that's how the account in 2 days went bye-bye. Because all you want to do now is make back that money. You know you shouldn't have taken that trade. You know you shouldn't have done that. You know you shouldn't have taken that money. You know you shouldn't have, done that. And as a result, you're trying to make that money back. You're trying to make that money back. And then it comes to a point where you can't make that money back because guess what? You've gone past your max drawdown or your account is blown. And then you feel horrible. You're like, why did I do this? Is trading going to work out? It's a cycle that a lot of people can't get out of. But if you expect the good and the bad, and you understand that struggle is a part of trading, and you understand that winning streaks, losing streaks, break-even streaks are a part of trading, it makes everything a lot easier because if you have a few break-even trades, it doesn't mean you're doing anything wrong. It just means you try again the next day. There's going to be market conditions that favor everybody and that don't favor other people. So many times I'm on social media and a lot of people love to comment on other people's things and say, oh, why did you take this trade? Why did you take that trade? It's always when people lose. That's what it is. It's always when people lose. And you'll see it. Some of your favorite creators, right? Some of the guys and girls that I follow on Twitter and on YouTube, other content creators that do trading. There's days where they take different trades and there's nothing wrong with taking the opposite to someone else. There's nothing wrong with you might take a loser, they take a winner, or vice versa. It doesn't mean you're better. It doesn't mean they're better. If I win on a certain day and someone else in my Discord loses, it doesn't mean I'm better. If I lose on a certain day and then vice versa, it doesn't mean they're better. It just means that those market conditions did not favor my system on that day. And that is normal. It's normal. So yeah, a bit of a long-winded response, Jacobus, but in terms of losing streaks, what I'd say is to get out of losing streaks, like if you want to talk about like the nitty and gritty, there's two options, and I'm going to talk through two that I've personally done. If you have the means to do so, start a fresh account, right? If we're talking prop firms, and this is the realism of it, if we're talking prop firms and we're talking, say you have a 50K account, and let's say you've lost 4 trades in a row and you're down $800, right? You just had a bad string of trades. The probability was just not in your favor. And this has happened to me before. It's happened to me. Now, what you can do here is I'll treat this, and what I have done is I treat that as like a side project, if that ever happens. It's a side project. Why is it a side project? Because the probability wasn't in my favor. I'm going to try and bring that back up on the side, but I'm not going to use that as my main account anymore. That account, unfortunately, the probability just did not work out. That's okay. If you have the means to do it, you get a new 50K account and you start trading that. And the chance of you doing that again is rare. It is rare. It's not as likely, right? Especially if you understand here that you may have done some things wrong, maybe, or maybe it was just probability that, came into a play. So you get a new 50K account, and then maybe here you win 2 trades, you lose 2, but that is going to be up more than this account. And you want to be putting yourself in positions with trading where your goal, well, essentially your goal is to make money, to pass accounts, but you want to put yourself in the position where you have the best chance to do that. And always trading the account that's in drawdown is not doing that. That's the reality of it. So if you can only buy one account, then you have to grind. You're going to have to grind back here and just keep going. That's what you're going to have to do. But in my opinion, if you've got the ability to do it and you're able to get another account, start a new account. Trade this account. And then on the side, if you have extra time or extra session time, try to bring this back out of drawdown. And if it doesn't work, and if you keep losing on it, you keep losing on it. That's just how it goes. So with prop firms especially, because you have the option to reset now, but also the option to get discounts and all the rest of it, that's what I'd say in terms of spreading the risk. But that's just one option. That's only one option. If you can only get one account, then you just grind. You grind, and we'll talk about that now too. So say you're $800 down, right? You can only afford one funded account or one EVA. That's okay. Don't worry about it. You probably have 2K of drawdown. We'll talk about that too, as you mentioned there. You have 2K in drawdown, and you'll probably think to yourself, if I lose this amount of trades, I'm going to lose the account. But if you lose the account, you're going to lose the account anyway. So I tell people, don't think of the worst, because again, that's recency bias. You're saying, oh, I've lost 4 trades in a row. I'm going to lose it. And if you program your brain to thinking like that, you are going to lose it. You will, because you're going to take poor quality trades. You're going to rush setups. You're not going to take profit when you need to, because what you'll do is if you're $800 down, and I've been there, you'll say, oh, I'm 250 up. Oh, I'm going to hold for 500. And then guess what happens? You get stopped to break even. And then guess what happens? You take another trade and you go back into drawdown even further. So if you're $800 down, in my opinion, you just keep trading. You just keep trading as per normal. If you've got a system that's profitable, if you've got data collected on that system, you keep trading as per normal. You keep trading. Can you drop the risk down? Yes. But the thing is, if you drop risk after 3 losing trades, it's time now. It's time, which some people are okay with that. For me, I'd rather save time and let the probability play out, because the chance, if I took 4 losing trades in a row, which hasn't happened at all, much, maybe a couple times, the chance of that happening twice in probability it's low. And for anyone, it should be fairly low. It should be fairly low. So think of it in probabilities, right? In that term. And just keep grinding it out. And there's 2 outcomes. In reality, there's 2 outcomes. Number 1, you bring it out of drawdown. Number 2, you don't. If you don't, again, it comes down to that acceptance of, look, it just didn't work out. Let's try again. If you do bring out a drawdown, cool, let's keep trading. It's hard. It's tricky, you know? It's tricky, but what I've realized with trading is that because it's all probability, the easiest way to make money back after losing it is to not even think about losing it. It's just to think about the probability and think, oh yeah, cool, the next trade I got a chance to win. And that's it. I'm just going to keep trading. And if it doesn't work out and this account goes bye-bye, I lose the account, okay. And if I can't afford one to the next month, if this is, if someone's listening and that's the position you're in, then you have to accept it. That's cool. When I first started trading, I was working all the hours, working overtime, doing all this stuff, and a lot of money went into trading to learn the skill. And yes, there was weeks as well when I first started trading where I'd lose an account and I'd go, well, I can't afford one. I can't afford one till the next fortnight. And it's hard to accept, but I had to go, well, what can I do? And so I tell people, don't worry about that until it happens. If it happens, then you have to accept it and move on. And that's where you have to have heaps of resilience as a person, as an individual, to accept the outcome, accept the circumstances. And then when the circumstances are again in your favor, then start trading again. There's no rush to it. It's a process, it's a weekly thing, it's a daily thing. So that's kind of how I like to see it. That's what I like to see it as. But yeah, that's a bit of a long-winded response, but yeah, that's what I'd say. It's hard, it's tricky, right? But that's what I'd say. If you can afford another one, you trade another one, this becomes a side project. If not, you keep trading as per normal. If you're afraid of losing the account, or you don't want to lose the account because it's going to be a long time before you can get another one, then drop your risk down a little bit and then just keep focusing on trading and following the process. It might not come out of drawdown for a while, but you're still going to have the account to trade, which for your psychology could still be better as well. And you do trial and error with this because obviously everyone's conditions are different. Everyone's positions are different financially in terms of what you have to do outside of trading. Some people have kids, partners, sporting, work commitments, different hours. So everyone's going to be different, and you've got to kind of trial and error that as time goes on. Yep, proper risk management. Let's talk about it. Let's discuss it. And we've got a few talking about the $200. I like this question. It's a really good question. I want to give everyone a good overview of this, right? And a realistic overview of $200 risk on a 50K account. Let's talk about it. And what's the time here in Australia? It's 8:31. I'm going to stay on for another 15 minutes. So I'll probably discuss this question. It'll probably take about 10, 15, and then we'll hop off. And this will be recorded too. So if you want to ask questions, post them in, but let's talk about this first. Cool. So risk management is a big part of trading, as most people know. And before I say anything about risk management, I want to say that everyone's position in trading is different. Everyone's position coming into trading is different, and everyone is at a different experience level. And I'm sure those here would appreciate that, right? So my position now, or your position now, is different to what it was 6 months ago, or different to what it was 2 years ago. And it will be different to what it is in 3 years from now. And we'll start with that, right? Based on everyone's position, there's going to be different things that, in my opinion, are smart and not smart to do in terms of risk management. So something that I do in terms of risk management may not be smart for my friend who I'm teaching how to trade. Does that make sense? But also, something that someone else does on social media, and I'm not going to name names, different people do, may not also work for me. Right? So not all of that is financial. A lot of that is not only financial, but also, as you say there, Echelon, it's your system and what the collection of data in your system says and what your risk tolerance is. Because everyone has a different risk tolerance, and we'll talk about that. So typically, typically with a 50K account, let's just use, we'll use Top Step, for example, or My Fund of Future, same thing. You have $2,000 drawdown. Now, when you're still learning, if you have not passed an account before, if you have not gotten a payout, if you've not passed multiple accounts and you do not feel comfortable passing accounts, $200 risk is a lot of risk. And I can definitely agree with that, with what you're saying there. If you haven't passed an account before and you haven't got a profitable system and you haven't got, in all honesty, if you haven't got 300 to 500 trades either back testing or your own trades collected in terms of data, it's a lot of risk. It's a lot of risk, right? Because $200 per trade, 2K drawdown, you probably are going to go on losing streaks more often when you're learning than if you're not. Does that make sense? So if you're new and you're in the first 6 months to 1 year and you haven't passed evals, yes, risk management could be different, 100%. Now, if you're not, and if you've passed accounts and you've passed evals and you've gotten payouts before, it's different, right? Because once you've got the data collection system in and you know how often your system works and how often it doesn't, you accept the probability of that system. And even though, yes, technically, yes, it's a 50K account, you've only got 2K to work with. So yes, it's only a $2,000 account. But the issue I have with risking less than $200 a trade sometimes is it doesn't make it worth it. For me, personally, in my circumstances. For other people, it can be really worth it, and I can appreciate that. But for me personally, based on my system, based on the risk management, based on the fact that I can pass accounts evals, I can get payouts, and I have, and I do, I'm happy to risk 200. I'm happy to risk, once I've got a buffer, 3, 4, 5, 600. I'm happy to do that because I know the potential upside for me is a lot more than the potential downside. And that is risk on versus risk off, considering it for your own circumstances and being okay with that. So for example, when I first started, I risked probably too much. When I first started, I was buying funded accounts with, my Forex funds. They used to cost in Australian dollars, like a lot of them were about $500, a lot of money. A lot of money for a paycheck. It's a lot of money. So for me, I didn't really respect risk management, and what happened, the accounts were blown. That's why I said, look, I had to wait until the next pay. And it was a painful process, but I learned a lot in that process. What people are also saying here, if you're experienced, and if so, they should not have 4 losers in a row, but the majority have not taken a single payout yet. Yeah, I agree. In terms of the correct mentality, yeah, I agree. Like I reckon in terms of a timeline, like I'm on the side with you there. Like I reckon if you haven't gotten a payout or passed multiple accounts, like evals, then on a 50K account, your goal should not be to pass the account. Like in all honesty, and I've posted about this in my Discord, if you haven't gotten a payout and you haven't passed multiple accounts and you're 6 months in and you still feel not confident, you're still lacking that system, trade an eval to practice. Like trade it to practice. So risk minimal, risk 50, risk $100. Risk such a minimal amount that you're not going to lose the account, because what you want to do is you want to use the eval initially, if I could go back, to collect data. And then once you've done that, and once you say, wait a sec, I'm risking $50, $100 a trade, I'm actually winning 3 to 5 days a week. If you can do that, and here's the bottom line. If you can win 3 to 5 days in the week, here's the bottom line. If you can win 3 to 5 days in the week and you can do that and come to me and say, Ruben, I've done that for 2 months, then you can think of other risk management strategies. Then you can think of doing other things, because then you know that you've got it. You know that you can risk more. But if you come to me and say, oh, Ruben, yeah, this week I won once out of the 5 days, and then the next week I won twice, and the next week I won 4, and the next week I won once, you're not ready yet. And that's okay. You just take more time in the process. So I agree there, John Paul, I agree with what you're saying, especially for the newbies, right? You should get an account to practice. Your goal is not to make money. Your goal is not to pass. Your goal is to practice. And your goal literally is to see, can you have consistent winning weeks for a couple months? Can you do that? You just trust me, you'll save a lot of time and a lot of money, right? A lot of time and a lot of money. And once you've done that and you go, wait a sec, I've done this for a month or two, I feel pretty confident, then test the waters a bit. Risk a little bit more if it suits your conditions, and then go for it. Slowly build it up. And you can't go from A to D. You got to go from A to B, and then from B to C, and then from C to D. If you jump too big, you'll get thrown back. So you've got to slowly increase the risk. In terms of echelon, $200 completely normal risk for 50K accounts. Yes, I agree now for me and for most people, if you're at that stage, that's a normal amount of risk. And for some people, even more, because there's different ways to trade props based on everyone's circumstances. But ultimately, It's this. That's what it is. And it doesn't matter if you're trading a prop or a personal. It's how much money do you put in, how much money you're pulling out, and based on your circumstances, how does that look? That's all it is. So they're good points. Truly depends on your system. Nothing wrong with risking less. Everyone has a different strat. I agree. Right, you want to pass and collect dollars, not become the prop firm's paymaster. Yeah, exactly. So, I think a lot of people, myself included, when you get into it, you want to make money like everyone, but it's hard. But just take the advice. I could have saved a lot of time and probably a lot of money in the process if I just spent 2 to 3 months at the start, not even trading demo, like actually get an eval, but trade it with lower risk. And here's the last thing I'll say, and then I'm going to hop off, right? If you can't consistently win 3 days in the week, and let's say you get to like 2-3 months in and you can't do that, keep going until you can. And when you can do that for at least a month or two, then maybe you can consider trying to pass the eval. Maybe you can consider, doing something different. Because the reality of it is, guys, if you're only winning 2 out of 5 days in the week, and you've got a low risk to reward, it's not going to be enough. That's the reality. It's not going to be enough to get a payout. You want to be aiming for 3 out of 5 days. That's the goal. And if you can do that for a month or 2 months, then you can consider. This will save you time and money. Then you can consider maybe doing something else with your risk. Echelon says, big mistake I made as a beginner is constantly buying evaluations, looking back at it. Yeah, 100%. It's a waste of money. Use the eval, and I wasted a lot of money too, right? Use the eval when you're first starting to learn to practice. A lot of people get the eval going, I need to pass this. That's the first goal. It's not the first goal. The first goal is to show you're consistent first. And then if you know you're consistent, and there's a few people in my Discord, they did that for a long time. They did it the right way, and they save a lot of money because, they might take a bit of time, but they know what works, they know what doesn't, they know what makes them go on tilt, and they're not, spending hundreds of dollars or thousands of dollars on accounts, which then obviously you're going to make back when you start making payouts. Start with one account, trade one account, aim for less, take your base hits. And everyone's going to be in a different journey. So if you're curious about that or you're not sure, send me an email. Full View Trading, AUS. Put this in the chat. You can send me an email. I'll be able to tell, and I'm not a financial advisor, but I'll be able to tell based on how you annotate your charts, based on your stats, if I was in that position, if I would do something different, You can also send me a message on Discord if you're on my Discord, or post the YouTube comment. It's easy to want to rush things to make your life better, your family's life better, but when you rush, you often get pushed back. And some people learn the hard way. I learned the hard way. I could have saved multiple thousands, to be honest, in the process, if I took a step back. But unfortunately, I didn't have someone there, a mentor, so to go, don't do this. Because at the time it was more, let's jump in, let's try to pass this eval. Once we pass this eval, maybe we'll get this and maybe we'll get that. But I wasn't ready. That's the thing. If you're not ready, you're not going to make money. If you're not ready and you pass, like say you pass an account in 2 days at Top Step because you can, or say you pass an account in 1 day with Apex because you can, it doesn't mean you're ready to trade that account, and you're not. So you need to prove consistency first for yourself and then hop into it. But good discussions on risk management. For beginners, that's what I'd say. For people that have past accounts, gotten payouts, the risk is different because there's different circumstances. You too, mate. Have a good one. Vince, only thing I'm risking is $77 for a month. 100%. And here's the thing, right? For different people from across the globe, money's different for everyone. Money's important for everyone. And so you just got to work within your means. You know, there's some people that will spend way more than I ever have on accounts because they can. You know, there's some big YouTubers that they just do boom and bust. They just spend whatever. They just go hardcore. If they lose accounts, they get another 20. And you've probably seen on Twitter, right? They just get another 20. Oh, I've blown the Apex accounts in 2 days. Oh, I'll just get another 20. Do I want to do that? No, I don't want to spend thousands like that. No way. So that's a thing. And then there'll be different levels of that. And you can't be upset about in any situation if, you know, would I want to do that? No. But even if that was you and you're like, oh, I wish I could do that. Don't wish, just do what you can do. Work with what you can do. Work within your means, because within your means is where you're going to trade the best. Outside of your means is where you're going to trade the worst, because you're going to be trading to make money and not just trading for the process. But yeah, that's a good discussion. Last one, does news impact or help my strategy? Well, to be honest, here's what I'd say, right? This will be the last one. If you have any questions, guys, post them in. I'm going to hop off in probably 2 to 3 minutes. News doesn't really impact my trading too much, but it can impact London session a little bit, because what will happen is, say it's CPI or PPI or NFP, it can impact it. The conditions can go choppy. So what I'd say is, in terms of, I guess, systems, right? In terms of systems, you got to follow something that's consistent. I just tread lightly on those days. I expect price to be a bit choppy on those days, if I'm honest, and I don't mind. I like getting my trading done in Asian session on those days. NFP, CPI, FOMC, I like trading Asian more so than ever, because I want to get it done. And those days, a lot of the time, I like to trade the opening range, the first, say, half an hour. Just get it done, because the conditions get worse and worse as the day goes on, and I don't want to be involved. Next lesson, maybe we'll talk about more some New York session strategies, some New York session stuff, but I'll make some videos in the future on that. I mean, a lot of people ask me, like, I don't trade New York at the moment, but I used to, so I know how it works. And the way I trade, you can apply to any session. So if you go back and watch my YouTube videos, or if you're in my Discord, have a look at the checklist I posted there, or even on my Twitter, right, Telegram, go back. The way I trade, you can apply to any session, which is a good thing to know for anyone, because if you trade New York session, if you trade London session, if you trade Asian, if you trade PM, you can do it. And that's one big thing I've realized. That's one big thing I've realized. You know, you can trade any session that works for you. Trade when you can trade. I thought I had to trade New York because everyone does, but that meant I lost sleep. And losing sleep for too long, it's not good. Health is number one, alongside family and a few other bits and pieces. Trading, for me, is down the list. I don't sacrifice sleep anymore for trading. I did at one point, but I don't. So you want to make trading work for you, because if you want to do it like long term, whether it's a side thing or a full-time thing, it has to work. You don't want to be trading tired as well. All good. All good. Thank you. Thank you. I found my model. It feels so good. Yeah, it's good. It's good when you find your model. It's good when things become a bit clearer. You know, for anyone here, the last message I'll leave you with is, don't underestimate the work that's required. Do not. Don't think that I'm special. I'm not. Don't think that you're special. You're not. We're all human, and we're all here to do something better for ourselves or our family. And so we have to put in the work. There's going to be sacrifice. There's going to be hard times. And my inbox is open. My email is open. I've posted in the chat. You can send me a message. I'll respond to you. Or just type in the Discord if you're there. With that being said, guys, have a good weekend. It's time for me to go for a run. It's still the morning here in Australia. And for those that are, you know, still enjoying Saturday, enjoy Saturday night. And we'll talk soon, right? We'll talk soon. Monday morning's coming up soon. Refresh your minds, take a bit of time off, collect your data, and we'll talk very soon. This will be uploaded on the YouTube channel pretty much straight away. And we'll talk then, guys. If you're not yet in the free Discord, the link to that will be in the description of this video. And if you want to follow me on Twitter, check it out, right? Post plenty of things here for free. Plenty of things here. But anyway, have a good weekend, guys. We'll talk very soon. It's been great having you here. And all the best, guys. Peace.